Well, the month of August has been tough for stocks so far, and we could be in for some more uneasy times ahead. Jared Blikre is here with a closer look at some of these details. Oh no, more losses?
Well, possibly, or just sideways action. Frustrating investors. I think investors know what frustration feels like. Here is a chart of the S&P 500 and what usually happens in a year when we've been up 10% or more as of the end of June. That is this orange line right here. The green line is what's actually happened this year. So we had that huge surge. NASDAQ was up about 30% into the end of the second quarter. But what usually happens is stocks just tend to trade sideways into early November, and then they continue their ascent into the end of the year. That's a well-known Santa Claus effect right there. But there's another way of looking at seasonality here that's very similar, and that has to do with the pre-election years. This happens once every 4 years. So we got the election this November, going to have a new president next year. And very similar to the chart I just showed you there, we tend to trade sideways over these late summer months into the election, and then you see some liftoff into the end of the year. So all of this speaks as to what could potentially happen next, but a lot of this has to do with the interest rate structure and what's going on in the bond market. Here is the 10-year T-note yield. This is up. It's about to settle, or it just did, at the highest price in years. And in fact, when we've seen the 10-year T-note yield spike above 4%, as it has this month, and it did a little bit earlier in the month of July, is we tend to see equities weakness. So you take a look at what's happened. We've seen some down movement in the indices. Here's the S&P 500. Here's the NASDAQ in the month of August. Definitely seeing that downtrend. Now, when does this resume? Well, it could be when interest rates back off a little bit, when people are less concerned about the Fed maybe having to hike even more, and also with the U.S. dollar, because the U.S. dollar has been trending higher as well. This acts as a headwind for stocks, and we've seen it come up against this level here. That's about 103.5. Going to put a 5-year chart in. Well, that could be simply the end of its run for now, just based on some simple technical analysis. And if the U.S. dollar does roll over, well, that would be a tailwind for stocks instead of a headwind. And just want to show you what's been going on in the month of August. This is today's action, only utilities up, but month to date, we've had about 11 trading days so far. Only healthcare is positive, arguably a defensive sector. And then you can see energy off about 0.5%, but tech, which was one of the most successful returns of the year here, has given back 6.5%. So we might be in a bit of a holding pattern for a few months until we see some liftoff. That's just seasonality, but that's kind of the way the wind falls anyway, guys.
Yeah, we certainly have seen a rotation out of tech over the last several days. All right, Jared, thanks.